Welcome back, everybody. Today, we're going to do a deep dive into something I know a lot of you are really interested in. It's the Reserve Bank of Australia's kind of surprising decision to hold interest rates steady. And of course, what that means for all of us, especially those of us in the housing market. So to help us break all this down, we have a great piece from CoreLogic here. It was published just a few days ago on November 5th, 2024. It's called The Last Leg of the Race. Data trending in the right direction, but not enough for a rate cut just yet. And you know what? This announcement came out on Melbourne Cup Day. Talk about burying the lead.
You're telling me, can you imagine trying to announce a rate cut in the middle of all the Melbourne Cup excitement? It's like the RBA was trying to sneak it past us.
Yeah, you know, it really makes you wonder, especially because some experts were predicting a cut just a few months ago. So what's the deal? Why is the RBA pumping the brakes?
Well, to understand the RBA, you got to remember, they are data nerds.
Yeah.
Like, seriously. They are obsessed with stability and having clear evidence before they make any moves. Back in 2017, they held rates steady for a record 16 months, even though everybody was saying cut. They really wanted to be absolutely certain that inflation was under control. And it feels like they're doing the same thing here. Holding that cash rate firm at 4.35%, just waiting for all the ducks to line up.
So no champagne popping just yet for all those borrowers out there hoping for a little relief. Let's get down to brass tacks here. Let's talk about inflation. This CoreLogic article says it's finally back in the RBA's target range, down to 2.8% for the first time since early 2021. So that's got to be a win, right?
Well, it's definitely a step in the right direction.
But
the RBA is not exactly doing a victory lap just yet. You see, they know this drop is partly because of those temporary government rebates on things like energy bills and rent assistance. It's kind of like putting a Band-Aid on a broken leg. It helps for a little bit, but it doesn't really fix the problem.
Okay, I'm starting to see why they're being so cautious. So tell me, what exactly are they looking for? What's that magic number or that thing that's going to give them the green light?
That's where this thing called the trimmed mean comes in. It's a little bit technical, but imagine you're trying to figure out the average height of everyone in a room, but there's one person in there who's like 7 feet tall. That one really tall person would make it seem like everyone's taller than they actually are, right?
I see what you mean. So it's like the trimmed mean is removing that really tall person to get a more accurate average.
That's it. You got it. The trimmed mean helps the RBA get a better sense of, the real inflationary pressure without those big ups and downs distorting the picture. And right now, even the trimmed mean is a bit higher than they'd like it to be.
So they're looking for that fundamental shift, not just a temporary blip. This brings up something I've been thinking about. What about housing? It feels like everyone's talking about mortgages and rent these days. So does the RBA take housing into account when they're making these decisions?
Housing? Oh, absolutely. It's a huge part of the picture. I don't know if you know this, but housing actually has the largest weighting in how inflation is calculated. It's like the heavyweight champion of the consumer price index.
Wow, I had no idea it was that influential. So how is the housing market impacting inflation right now? Are things starting to cool down?
Well, there are some signs that things might be heading in the right direction. The article mentions slower growth in new dwelling prices, which definitely helps. But even more importantly, it looks like that crazy train of rent increases might be finally slowing down.
Oh, that's got to be good news for renters. But is this just a temporary blip, or is this a real shift in the market?
Well, it's hard to say for sure at this point, but the article says the pace of rent growth is easing, which, could mean things are starting to level off. That would be a huge relief for a lot of people. But the RBA wants to see that trend continue for a while before they get too excited.
So it sounds like they're keeping a close eye on the housing market, along with all these other economic factors. Speaking of which, let's talk about jobs. It seems like that's always a hot topic.
Yeah, the jobs market. It's a tricky one. Because on the surface, a strong job market with low unemployment sounds like a good thing. But the RBA actually wants to see things loosen up a bit.
Now that seems counterintuitive. Why would they want unemployment to go up?
It all comes down to something called wage pressure. When the job market is really tight, employers have to compete for workers, so they start offering higher wages. And that can lead to more spending. And guess what? More inflation. So the RBA is trying to find that sweet spot, trying to keep the economy healthy without letting inflation run wild.
It sounds like they're walking a tightrope. I'm starting to get a sense of just how complex this is for the RBA. They're juggling so many different factors. But let's not forget about the people behind all these numbers. How are these economic forces impacting everyday Australians?
Well, It's not pretty. The article paints a pretty sobering picture. People are really feeling the pinch from those high interest rates and the rising cost of living.
Yep.
Imagine trying to stay afloat while the tide keeps rising.
I know a lot of our listeners are feeling that. The article talks about how those pandemic savings that a lot of people built up are starting to disappear, and we're seeing a rise in mortgage arrears back to pre-pandemic levels. It's a real struggle out there.
It is. And this article reminds us that these aren't just abstract trends. We're talking about real challenges for people.
Mm-hmm.
They tell the story of a single mom in Brisbane who's having to cut back on essentials just to make her mortgage payments.
It's tough.
Yeah.
It's a tough situation for sure. And I think this CoreLogic article really highlights just how connected all these different parts of the economy are. It's like, like a giant game of Jenga. You pull the wrong piece out and the whole thing collapses.
Oh, I like that. That's a great analogy.
Yeah.
I mean, it really shows how tricky it is for the RBA. They can't just focus on inflation or housing in isolation. They have to think about jobs, investment, and the whole economy. Exactly. And on top of all that, they've got to deal with all this global uncertainty, like supply chain issues and geopolitical stuff. It's a lot to handle. But let's bring it back to the housing market for a sec. This CoreLogic article talks about affordability as a big concern. I bet that's something you're thinking about too, especially if you're trying to buy a place right now.
Oh, absolutely. Affordability is the elephant in the room. It's been a problem for years, but these rising interest rates have made things so much worse for a lot of people, especially those trying to buy their first home. Owning a property just feels completely out of reach.
It's a real struggle. And it's not just the interest rates. The cost of living is going up too, which makes it even harder to save for a deposit.
Yeah.
And, like we were just talking about, that rise in mortgage arrears shows that some people are already at their limit.
It's pretty disheartening. Are there any solutions out there, or are we just stuck in this cycle of unaffordability?
Well, there's no easy fix. But this article does mention a few things that could help. One big one is increasing the supply of affordable housing. That could mean building more social housing, or encouraging developers to build more affordable units, or even looking at those new housing models, like co-housing or tiny homes. Have you seen any of those?
I have. There are some really interesting tiny house communities popping up. It seems like a creative solution, especially for people who are willing to downsize. But even if we build more houses, what about government policies? Can they do anything to help with affordability?
Oh, for sure. Government policies have a huge impact on the housing market. We could look at things like reforming zoning laws to allow for more density, or giving tax breaks to first-time home buyers, or even putting some limits on how much rents can increase.
Those all sound like good ideas, but at the end of the day, if people aren't earning enough to afford a place to live, it doesn't matter how many houses we build.
That's a great point. We can't just focus on housing. We need to address wages and income inequality too. We need to look at things like raising the minimum wage, making it easier for workers to bargain for better pay, and investing in education and training so people can get better jobs and earn more money. It's a complex problem with a lot of different pieces.
It sounds like it's going to take a real team effort to solve it, but at least there are some potential solutions out there, which is encouraging. Okay, so let's shift gears a little bit and talk about investors. I know a lot of our listeners are wondering how these economic trends and potential rate cuts might impact their investment strategies.
Yeah, that's a really important question. For anyone who's thinking about investing in property, or who already owns some, this article suggests that a rate cut could boost the housing market, leading to more buyers and higher prices.
So that would be good news for investors, but I imagine there are still some risks.
Oh, definitely. It's not a sure thing. Real estate goes up and down. It always has. So it's important to take a long-term view and do your research before you make any big decisions. What are your thoughts on that?
I completely agree. It's not the time to be impulsive. So what are some key things investors should be thinking about right now?
Well, the most important thing is research. You got to understand the local market. Real estate is all about location. You want to choose areas that are likely to be in demand and where prices are likely to go up over time. Don't just jump on the latest bandwagon.
That's good advice. What about the type of property? Are there certain types that do better in a changing market like this?
It really depends on your goals, how much risk you're comfortable with. Some investors like to stick with what they call blue chip properties. Those are in established areas and tend to be more stable. Other investors prefer emerging markets or properties that have potential for development. They're hoping for bigger gains, but it's riskier. What do you think about that?
It sounds like there's no one right answer. It's all about finding what's right for you. Any other tips for investors?
I'd say stay informed about what's happening in the economy. And be prepared for things to change. Remember, the RBA is being cautious. And we don't know for sure when they'll cut rates or by how much. So be flexible.
So don't get too attached to a specific outcome. Stay nimble. Good advice.
It's like we're all just kind of waiting to see what happens next, like we're in that last stretch of a marathon.
Yeah.
But we don't know if we have enough energy left to make it to the finish line.
I love that analogy. So the RBA is holding steady for now. Inflation seems to be easing up a little, but there's still so much uncertainty. And, the article focused on these national trends, but real estate is local, right? What's happening in Sydney could be totally different from what's going on in Perth or Hobart.
That's so true. It's like, you wouldn't use the national weather forecast to decide what to wear in your own town.
Yeah, that's a good point. So how can our listeners really figure out what's going on in their own area?
Well, you got to go beyond those big headlines. Look at the supply and demand in your specific neighborhood. Are there any big developments happening? What are the demographics like? Those local details can make a big difference.
So it's like being a detective for your own market. Talk to the local experts, read those property reports, do your homework.
Exactly. Talk to real estate agents, mortgage brokers, anyone who really knows the area.
And don't be afraid to ask questions. Whether you're a seasoned investor or a first-time buyer, get those answers you need.
Yes. It's your money, your future.
Well, we've covered a lot of ground today. We talked about the RBA holding rates steady, inflation maybe starting to ease up, but the future is still pretty uncertain. So any final thoughts for our listeners?
These economic cycles are like waves. They go up and down. We've been through this before. So stay informed, be strategic, and don't panic.
Love it. Be informed, be strategic, and ride those waves.
Well, thanks for joining us for this deep dive into the Australian housing market and the RBA's big decision. We hope this has been helpful as you navigate your own real estate journey. My pleasure. And remember, the best investment you can make is in your own knowledge.
Couldn't agree more. Until next time, happy investing.